the LNG market facing a wall of new supply, just as China's gas demand growth has faltered, it is surprising how few new projects chasing a final investment decision have been postponed. Global LNG supply is presently around 250 million tonnes per annum, and there is a further 140 under construction. Recognising this, the global market will struggle to absorb such a large supply uptick. And we at Wood Mackenzie have for some time been forecasting a softening of the global market. However, that bearish prognosis is now being exacerbated by a demand downturn. Asia, and China in particular, has been key to this revised outlook. China's LNG import commitments are set to rise by 17% year on year between 2015 and 2020, from 20 to over 40 million tonnes. But China will struggle to take all this LNG so quickly. The stark reality is that China's LNG imports fell by some 4% year on year in the first 6 months of this year, a consequence of subdued industrial output and fuel competition, which was driven by relatively low-priced oil. The outlook for longer-term incremental LNG demand growth in China is also being negatively affected, and with lower industrial output and power generation competition increasingly characterising other key Asian LNG markets like South Korea, Asian buyers are not in a hurry to finalise new LNG contracts. Wood Mackenzie's view remains that the market opportunity for new LNG into Asia does not open up appreciably until after 2022, implying that new project FIDs are not really required until 2017 at the earliest. Now, recognising this oversupply, some projects in the US have been postponed, like BG's Lake Charles, and others have been cancelled, like Accelerate Slovakia Bay just this week. But they are unusual. Most companies continue to push ahead with their new LNG projects. Major project operators, including Shell, Petronas, Eni, Anadarko, BP, ExxonMobil, and Woodside, all still claim that their projects will take FID before the end of 2016. Why? Well, postponement at some projects could invalidate agreements for the portion of LNG sold so far and jeopardise hard-won stakeholder support, including from local communities. Some developers may be worried that a loss of momentum could favour their competitors and that a project postponement may be tantamount to a cancellation. If company statements are to be believed, we will see FID on some 50 million tonnes per annum of LNG from the US and a further 50 from outside the US within the next 6 to 18 months. Development of even half of this proposed supply would prolong the Asian oversupply to 2025. Our view is that the global LNG market doesn't really need all this LNG at the pace proposed, and as companies confront this reality, a raft of project postponements will follow.